with our course, Rethink Commercial Education, out of that, 60% of them owned commercial properties.
I always think when it comes to commercial property, whatever your involvement is, you want to have the best possible team in your course.
Time is the most valuable resource on earth, I think, once you get past the day-to-day expenses of life. So you want to get your time back.
Okay, how you going? Phil Tarrant here. Hope you're well. Welcome to Inside Commercial Property with Rethink Investing. Good to be back. We get together every single month to get stuck into commercial property and where it's going. And I've got some good briefing notes today. And as you know, if you've been shooting this for many episodes, we're getting a little bit more prepared with this, and a lot of that's to do with the feedback we've been getting from a lot of our listeners. Really engaged, really connected, asking a lot of questions. So we want to make sure we capture that so we can steer this conversation as effectively as possible. But I do note it's quite alarming that episode number 42 of Inside Commercial Property with Scott O'Neill, and I know also we have some fancy new branding, which is pretty good, and a guy's picture on it that looks like it's been photoshopped to make him 10 years younger. Scott O'Neill. Scott, how you going?
I'm good, mate.
Yeah?
Yeah, times are changing. Like you said, always trying to improve this podcast, and feedback's really good, but yeah, we just don't want to just rest on our laurels and, stay the same. We just, prepare more, get more guests in, keep the feedback coming, guys, as well. Like we're getting really good feedback from, we were just talking earlier, like many agents across the country. They're saying we've brought a lot of awareness to the commercial market in general. Yeah, investors alike, they're done really well out of this asset class. So yeah, there's a shift happening. I think this is just one part of it for sure.
Yeah, I reckon you might be one of the most loved people in commercial real estate, and I might be one of the most hated people in commercial real estate because I know you surf, and when I had more time, when I was a bit younger, I used to do a lot of surfing, and when you had something good, you kept it to yourself and you didn't want anyone else to know about it. It's when some people turn up your break and start surfing and telling all their mates, you go the next day it's busy, go the next day it's busier, next day it's busy, and then it's all over Instagram, right?
Yeah.
I reckon there's a lot of commercial investors who are going, why are these guys talking about this? Like they've wrecked it for everyone. Like it's so much more competitive now because Scott O'Neill, the buyer's agent's come in here and promoted all the benefits of commercial real estate. How do you reconcile that, Scott? You okay with it, mate?
A client actually told me that, like, I know you joke, but yeah, he literally said this because he's 75 years old. He's been buying bulk commercial properties for a long time, very wealthy man. And he said, yeah, back in the 80s and 90s, I wasn't up against anyone except owner-occupiers, and it was just me, and the returns were amazing, and yeah, I had it all to myself. And now it's very hard for a guy like that to compete because they're not buying every day of the week. They've got a new generation of agents. Their competitive advantage is gone now. So yeah, you're right.
So you've turned it. The competitive advantage now for a really good commercial investor is having a good commercial buyer's agent, because there's still a lot of properties out there you can buy. You just not necessarily always the good ones, right?
Yeah, look, the trick's just connections. If you're an individual and you know the right people, like any industry, you're going to get a head start. So, Rethink Investing is, by design, just a way of getting a head start. So we network as much as you possibly can, and we buy as much as we can of good quality property with the goal to then work with that agent again. And because there's always a buyer for a good property. So once the good one comes up, we're desperately holding on to it.
Yeah, and so play the advantages is what I take from that. And It is a competitive space, so why wouldn't you look for the advantages when you get it? But we talk a lot about buying commercial assets here, and that's where we started this podcast. We're now at episode 42, but go back and tune into it. There's 41 other episodes that you can go and listen to, and we started this in the depths of COVID. We spoke about this last podcast we got together when we had your wife on the show, and we got into the actual origin story of Rethink and where you guys are going. So go and tune into that. It was really enjoyed that discussion. You can find it on any of the podcast channels, or just search any of the video players. You'll find it on YouTube. But we do talk a lot about acquiring properties. We probably should talk a little bit more about managing more effectively, which is a big part of it. And that's going to be the thrust of today's conversation, based on a lot of the feedback that we've been getting, and people can send their feedback to, is it info@rethinkinvesting.com.au is where we send people?
Yep, that's right. And yeah, we thought this topic's becoming increasingly important due to the maturing of our listener base as well. Like a lot of them have commercial properties now. Like with our course, we actually got statistics on this. So Rethink.
What's the course?
Rethink Commercial Education.
Okay.
Out of that, 60% of them owned commercial properties. And yeah, that was a very high percentage, really. So there was some with multiple commercial properties in there. So you know, that I would have thought would be more of a junior listening base. But it's, yeah. So obviously, I don't know what the stats on this. We should try get surveys out one day.
Yeah.
But yeah, there's clearly a lot of people that own commercial property now. Because this is a maturing space now, and you got to really learn how to get the maximize what you got with your portfolio. It's not just about buying; it's about how to kind of get through the bad days when you're managing a property, or you know how to get improvements with your current portfolio. And you know, you would have heard from the last podcast. There's lots of good and bad days we've had with our own portfolio.
Well, even you guys admitted that your portfolio wasn't perfect at a point in time, and a lot of it come down to management. So management is key. Where if you acquire, well, great, but you want to make money on the way through. So you need a good manager. And I'm told that you've been lurking around Brisbane recently on the ground, seeing what's going on, but you know, also catching up with your property manager up there who joins us in the studio, Sophie Dugan. You guys have been working together for a little while, haven't you?
Yeah, long time. That Sophie manages, I don't know how many of our clients' properties too, but yeah, just one of those really good managers you want to hold on with both hands to make sure they don't get that you don't lose them, because they do add value to your portfolio. And unfortunately, we've had many bad managers in the past too, resi and commercial, and a good one is pretty hard to find these days, because it is a hard job. Like it's a high frequency transaction type industry where a lot of it's low value too. You know, it's not like you sell a property and there's millions of dollars on the line. There's just hundreds of little, you know, sub $1,000 touch points, and that's hard to manage. Much harder.
I you know, having sort of knocked around property management a fair bit, it's a tough job, right? And it's relentless and it never ends, and you never get thanked for all the good work that you do. You only get the sort of the criticisms on the stuff that doesn't go your favour. So these property managers I know, good ones are built out of granite. And it's funny that you're actually happy to share, Sophie, with our listener base, because she might not prioritise your stuff anymore after this podcast. I'm sorry, Scott, but
sharing's caring.
Sharing's caring. But this is what you guys do. Sophie, welcome to the show.
Thanks, Phil, and thanks for the introduction, guys.
No, thanks for coming down. So you guys got together in Brizzy last week, on the ground, seeing what's going on. What would you talk about? Tell me all the inside scoop.
So we were having a look at opportunities in the current market in Queensland place, and then what we're looking at is also then actually what's happening with commercial property management, where there's those opportunities to add value on sites and do not only the foundations really well, but also the exciting, more strategic stuff of commercial property management, which is where the fun can happen if it's done well.
So it can be fun, commercial property management?
So it can.
Yeah.
And that's what we wanted today, I guess, let people know about, is if you get those foundations really strong, you can build from there. So if you're a commercial property investor, what you're probably excited about is building something that you can for intergenerational wealth, having good people on your team that you've got lifelong partnerships with, which is what Scott and the people do as well. So I guess it's just looking at businesses' relationships. So there's property management and there's a level of expertise that's needed to see that through. And then quality relationships and performance on your asset over time. Scott and the team, they can help you make money in terms of the best buying and opportunities out there. And then after settlement, if you've got the right people on your team, then it's like looking at the performance of that asset then on an ongoing basis. It's continuing to grow and evolve. So having good people there is a great place.
Well, property is a commercial property is a contact sport, but it's also it's a people game. It all comes down to the capability of the team you surround yourself with, and your firm Dugan Co Property. Have you been doing this a while, or what's the sort of backstory with you? How did you find yourself in commercial property?
Commercial property. We've had our agency coming up 6 years now.
Okay.
But prior to that, I was actually finance. So I was working over in the UK for the Royal Bank of Scotland, and I was as a relationship manager helping to oversee structured real estate capital portfolio of about 1.5 billion there from a finance perspective. London was great fun, but then came back, Queensland born and bred, but not quite ready. So transitioned down to Melbourne, where there's a big finance sector. There I was actually looking after the acquisitions and funding for commercial and residential agents on property management businesses. So from that area of experience, I got to see what's working well in the industry, where's the strengths, the opportunities, where can we be also lifting up that standard and doing different things. And then 6 years ago, Paul Dugan, our director from Dugan Co, set up Dugan Co Property, and we've got a very strong property management as well as sales and leasing business, and we just focus on our client success. And that's what's got us here today, and I believe that's the same sort of values that as well Rethink have.
You obviously have a passion for property because you smile a lot when you're talking about it, so it means that you're happy being in commercial property management, which is cool. We do a lot of sales and stuff. So where did you collide? Like, how did you find each other? Give us a backstory there.
I think we maybe bought a property off Paul Dugan back in the day, and I was like, a lot of the time we'll just use their management arm as a sign of good faith, really. And they just turned out to be very good managers, and we kept working many times, and like talking hundreds and hundreds of times as well. And the complaints didn't really come, and that normally happens. Yeah. Because like every other, it's probably, and that's one of the reasons I personally will never vertically integrate the business model Rethink into property management, because it's just something you can't do without, like as I said, high frequency. It's a pretty thankless game as well, and you need locals on the ground to, just sort of be third party in this transaction as well. And Dugan Co are, I think, one of the best in southeast Queensland, and they're expanding, and it's just been good working with them, and that's basically the commercial arrangement. They just do a good job for our clients, and that kind of seals the circle of the service really for us and our clients.
It gives you a pretty good rap. I haven't heard him sort of speak so glowingly about someone beforehand, which is really cool. So you're expanding, but your core business is property management and sales. Yeah. What's Scott like to work with? Are you easy to work with?
He's great to work with. Yeah. And it's funny though, there's different relationships from a property management perspective to a sales and leasing agent, but Rethink the quality of their clients. And at the end of the day, business is not just one transaction. It's in it for the long term. So how matters are negotiated and handled though, it's really great. And what he is doing for the industry as well as being picked up across all areas of the business. Yeah,
it's good to have a vocal advocate sort of championing not only commercial asset as a investment class, but also those people that work in and around the commercial property to ensure investors get the best outcome. But it must be an interesting relationship, because are you still buying property through these guys, but then that there's also a management sort of relationship? How do you sort of keep a nice firewall on that so you can have hard conversations at 10 a.m. in the morning on acquisition, and then you can work collaboratively on a management type of issue?
It's a good question. Like property management and sales, they're so separate. So like, you almost feel like property management can be a tool for negotiating too, because if it's over rented, you want to, I'd literally ask Sophie and say, send me some comparable rentals, and Sophie, and she's done it before, like they're just fair rental appraisals. So if it hurts the sale, like it's going to be found out anyway. So I think that side of thing will always wash through in the end. So it's separate. So we can have the hard conversations with the sales guys, and we're just sort of drop it or leave it type offers. Like there's not much emotion in it, so it doesn't really get heated. We don't care if we lose the deal. They don't care if we don't buy it. It's pretty simple. If it works, it's great. And then, we'll obviously continue down through the transaction. Talking with a property manager in any asset class in any market is very important for due diligence, because there's so many little local factors on rent values and the height of roof and age of building, and is the fit out contributing to a higher rent? You almost need a manager who deals with new leasing inquiries to kind of cross-check all that for you. And from a local's point of view too, because, we're across Australia. We need to be an expert in, north of Perth or, down in Hobart CBD. Like you cover, the way to cover it all is really to be across the best managers in the market.
And you made an interesting point there. I just want to pick up on it. So you'll give an offer and say, that's the offer. When you put an offer in for a property, it's largely that is the offer. It's not like, hey, we'll go up or down, left or right. It's like, this is what we're doing, we'll do a deal on this basis. That's how you essentially negotiate.
Yeah, so we put offers on about 100 properties per week, and out of that, about 10 of them work. You get through to a contract. So we do about 10 contracts per week total, but so 10% of our offers are accepted. So the way to do that volume is to put those take it or leave it. And then some are low balls, some are just under. If it's the best asset we've ever seen, we'll go at market and just hope. But, there's always someone that'll pay over market, especially now the market seems to kind of be gaining momentum again. So, 10% is our strike rate in offers, and that allows us to get good deals when they come through.
Yeah, and no doubt, just on the sales side, while we're talking about it, you enjoy working with buyers agents on that basis, or you'd rather go directly to the buyer?
No, absolutely. We enjoy working with buyers agencies. I think it's the trusted advice. We work with solicitors, we work with building and pests. And buyers agency actually helps to, bring a standard and level of communication across the board for all the buyers and people who are looking out there for opportunities in commercial property. So they've actually been really great to deal with.
Yeah, it's look, again, we're talking about buying, but we're here to chat about sort of the management of your commercial property. And I guess that sort of comes to the question, Scott, and I'll ask Sophie the same thing, because you'll look at it through a different lens. Why a specialist and proactive sort of manager on your team is so important?
Because if they get it wrong, they will charge the wrong rent value. A manager that doesn't understand that increase in rent equals increase in equity is probably the most common type. Because it's so easy just to say, let's leave the rent where it currently is because the tenant's good, but not increasing that rent by 4% or CPI, it might be 7%. You've just lost 7% equity on that rent value.
I think you're going to have to explain that a little bit better, because that's a really important point you've just brushed over. Increase in rent equals increase in equity.
Yep.
So it means the better the rent, the greater the capital value of your asset.
So if you got if you've got $1 million property and it's renting for say $70,000, and that goes to $75,000, your property is not worth $1 million more. I'll get the calculator out, because every month.
Here we go. I thought he normally rolls with a calculator in his pocket, an oversized calculator, which I think we probably know the same accountant. I don't know if you've probably met him, and he's always got a calculator at the ready, but he loves his numbers. Scott, doing it live.
Yeah.
So let's see how this actually works. This is the notion of increase in rent equals increase in equity.
So let's say we've got $70,000 rent, and you've just bumped that up by 5%. So that means your new value is $3,500 of extra rent. If the cap rate of that market's 6%, you divide that 3,500 divided by 0.06, so 58 grand equity. So if you decided, it's too hard to increase that rent because the tenant's so great, you've just cost yourself $58,000. Probably not worth it if the market's growing. And then there's a cumulative effect of not doing that over many tenancies, and then time, that equation will look worse and worse. So it can end up costing you millions of dollars very quickly if you've got a large portfolio by just not keeping up with the market. So it's a lot more important, I think, in commercial to keep your rents at market than even residential, because $3,500 is not going to change anyone's life per year. It's the equity. And if you can keep your equity up and a manager understands that, that's super important. And I know one of the most recent assets I bought, and Dugan Co are managing it, there were 10 tenancies. It's in Brisbane, up in Brendale, and the rents were about 30% under. So we took a sharp yield at purchase price with the goal to add as much value as we possibly can in 3 years. And every time we have a meeting, we do these Zoom meetings with my wife and the Dugan Co guys, and we're like, just remember, this is a 3-year plan. We want the rents as high as possible. Let's just get it done. And I'm happy to have a longer vacancy or offer more 3 months rent to get it done. I don't care what it costs, as long as the end rent is more in 3 years' time, because that will mean, in that case, a lot more money in that asset.
So it's better cash flow, number one, but also number two, you're getting an equity or a capital value uplift. Why does it matter? Is it a bank valuation lens you're viewing that through, or is it just like, hey, I feel good because my portfolio is worth more money?
Yeah, look, I think if you're an investor, my opinion is you invest well. So, we're not doing it for any other plan other than give us options in 3 years. So we might look at strata titling that asset or selling it, maybe redeploying it into an even bigger one. Because our long-term goal, which we've mentioned, is to have less assets but more higher value ones, because time is the most valuable resource on earth, I think, once you get past the day-to-day expenses of life. So you want to get your time back. And, we've got 68 odd tenancies. That's too many, I think. It's not a lot of people would wear that as a badge of honor. I actually look at it as bad planning.
A headache.
Yeah.
Yeah.
So
I think we sing from the same hymn sheet there. We've spoken about this.
You'd rather just 10 great assets, not 24 of them mediocre stuff. Like that's like collecting toys. You got to do better than that.
It's funny though. You need to go through that journey yourself though, where I know most people kicking off and probably think more is better.
Yeah.
And they sort of start accumulating property. Most people, we've spoken about it beforehand, they start off in residential and they pivot into commercial. But I guess to a point where you just go, I want completely the opposite. And then that comes back to really good property managers as an enabler for helping you. And you're talking about your own portfolio, but the same would ring true for the portfolios you help create for your clients, that you want your portfolios performing and you want to try and do it with as minimum friction as possible.
Yeah.
That means having the right assets, but importantly, the right property manager, commercial property manager running it for you. So they've got the eye on the prize, as in cash flow, but then also really dialed into your objective there, increasing capital value, so you can redeploy or do whatever you want to do with it.
Exactly. Yeah. If your property manager understands that more rent equals more equity, that's almost the biggest thing, which is surprisingly rare. Like, they understand this, obviously, but they don't treat it as seriously as they should, because if they did, that might mean more sales for the sales side, because you create more equity. It gives you more reason to sell. It's not just collecting rent. It's you're running a business that creates a value at the end of the day. And that's why we work with these guys, because they get it.
Yeah, and that's not necessarily always the case in resi property, but I imagine one of the key takeaways from this podcast is the more rent equals the more your property is worth.
Yep.
So therefore you need a good commercial property. So is this a common, this is a sophisticated view when it comes to commercial property investment, but do you see commonality with other owners and landlords that see the world the same way as Scott?
They do, but that is a sophisticated view. What we've found a lot, and what I've had calls about recently, is an owner will call us and they say, I own an asset, but I feel out of the loop. I feel out of the strategy, and I don't know what's going on and if it's actually getting delivered. And to begin with, sometimes it's just like, I feel like there should be more happening on my asset in terms of the performance, in terms of different activities, but I'm not involved. And they don't want to be doing that as a property manager, but they want to know that they've got people there who are looking after their best interests. So that's a lot of the way that we have people contact us. And then it's having those conversations, and it's like looking at property management. You need an expertise in your asset class and who can look after all the foundations really well, which is your financial management, collecting rent, minimising arrears, compliance legislation, all the nice dry topics. But you also want someone who's looking at that lifetime partnership and growth with you, where you're going to, and then how commercial property can be that vehicle to deliver on it. So Scott spoke really well there. It's like, if you're looking at it from a property management perspective, there's the base layer, but then it's like total returns, is it income return and capital return? And both property management done really well has a great way to accelerate that over time.
It's really well considered. And for our listeners, the way I would view what you're just speaking about there is, a lot of people think as a property investor, you need an accountant to do your tax return, right? And that's true. That there's a compliance function to what the accountant does, and there's an administrative compliance function of it. But there's also a strategic aspect of it. And I have the relationship with my accountant. We do all this stuff, but then we do the fun bit, and that is strategically where we're going with it. So what you're saying is that a good commercial property manager does the same thing. They'll make sure that all the administration is done, and that's largely given, and that can be done well. Not all property managers are created equal. But what you're talking about there is being strategically involved and engaged around offering insights, advice, strategic positioning, strategic direction for the investor to get more out of it. And that sounds like the key.
Yes, definitely. And I think that's where the real gold is in commercial property, is looking at having that right advice. And I always think when it comes to commercial property, whatever your involvement is, you want to have the best possible team in your court. That's why people are dealing with Scott. That's why they've got, if you have the right property manager, you have the right lawyers, brokers, everyone who can optimise and get those extra couple of shifts in the needle to be able to grow your portfolio and deliver on a strategy over time rather than just the 101 as well.
So my argument to that would be the compliance and the administration, that's all cool, and you get paid a percentage of the rent. Why would you do the other stuff? You're not going to get paid any more money by doing that.
Well, I guess it is more an asset management plan. So there is a difference between property management and asset management. Where we can deliver value for our clients over time, it also gives opportunities for us as a business. And we see like successes in co-elevation of the market, which is what a lot of this education and the Rethink Commercial Education course and other things are about. It's like lifting it up. And where I guess we do also have, if you're a property manager and you've got an association with a strong leasing team as well, then there is that benefit if you can help bring lease negotiations forward, and you want your property manager to be incentivised by that. Because ideally, if they can bring up your rent, bring up your capital value, you can make money in commercial property by great buying, by performance of the asset over time, and then leveraging on your capital value to either get a refinance, buy another one, sell, divest, or look at that longer term strategy on consolidating what your lifestyle choices and financial prosperity looks like at that time as a family too.
Yeah, and I think you've answered that well in terms of what a commercial asset manager, commercial property manager, commercial asset manager should be doing for you. And I've had many different property managers over many years, no doubt, you as well as Scott. And I would say more of them haven't been good than better, if that makes sense. But when you find a really good manager, you stick with them. And it sounds as though the way you respond to that was you get the basics right and what people expect. It's all the upside connectivity or the ecosystem benefits of working with a really good commercial property manager. You've come here and you're sharing your commercial property manager, which I'm sure she's going to probably get pretty busy after this podcast. But how do you know if your commercial property manager is a good commercial property manager, Scott?
I normally do like a loose interview process. So once I've bought the property, I'll send it to more than one agent if I'm looking for one in an area, and just say, let's say it's a shopping centre. What's your 3-year plan to get rents as, or improve the tenancy mix? Like, how do you manage, the outgoings in this? Like, is there any value adds you can see? So a lot of them will just come back with not much, and then some will be very detailed. And that's straight away, that tells you who to go with.
How do you know, and I sort of go through this, where you go, something's just not right here, something doesn't feel right. It's, you sort of, you feel it when it's not working out. What's the sort of triggers for you?
It's all too quiet. The classic, let's just renew the rent at the same value. That's and most managed owners, and Sophie probably won't like me saying this because it makes life harder, but it always should be challenged, because there's so many sort of properties that are under rented, and if you're just sort of renewing the lease, you're costing yourself a lot of money, and it's hard work to negotiate against a tenant. No one wants that ugly conversation, but in a commercial property world, you're dealing with businesses. Like, it's not like, it's not an ethical issue, I don't think, where you're pushing the rent up on a working class family and they're going to struggle. Like, you might be dealing with a multi-million-dollar medical centre. Like, they should be paying market rent. Otherwise, you're just giving them a free ride at the cost of your interest. So yeah, I think getting some comparable rentals up before they have a conversation, say, look, we believe your rent is 10% under, and here's the proof. That simple step is quite rare.
Yeah, I don't want to beat up commercial property manager or property manager in general, because I know it's a bloody tough job. But to your point, where they just go, I just renew the rent on the current thing, or hey, we need to fix all these things because the tenant's not happy about it. I think a lot of property managers, I'm going to get you to respond to this, but a lot of property managers will go the easiest path to actually get the job done. But this comes back to your point around a commercial property manager that works for you are worth their weight in gold.
Definitely. And I think like that path of least resistance versus in commercial property, when there's problems or challenges, it's like, how can we leverage that or get opportunities as well? So it's important having property management and also that leasing and market dynamics understanding coming together to really get the best performance. I can, as I guess, a bit of an example, and it's one of Scott's clients, but I'll just give you a high-level details on one of the acquisitions that he helped happen, and then we've looked after it over the last 2 years. It was acquired about in the Western Corridor, which is a booming industrial precinct. We've got a lot of infrastructure and it's tightly sought after at a very sharp yield at the time, 7.42% for $2,675,000. The passing rent came through, we had the normal rent reviews, but then we came to a market rent review. We're quite fortunate in our business because if you do get a good property manager that's either got a strong sales and leasing business or really good relationships in that area, we go directly to the director and say, what's happening? How can we get the best result? Do we work with this tenant? Where's the market rent? Giving you some numbers around that, it's really tangible for you as an investor before you continue those next step discussions. We did that, and in the end, we got an uplift on the property of $1.5 million in 2 years in capital value based on the good yield buying helped from Scott there, as well as being firm on that market rent review. And that discussion for us in terms of time invested was a lot. Like we had they've got, it was an international company, so we were having Zoom meetings with their new CEO from London. We were having site meetings with their general managers on the ground. It is a lot of work, but then you see that for that owner.
I'd say huge uplift. I imagine the owner was pretty happy with that. That comes back to the point, increase in rent equals increase in equity. That's a big uplift.
And that's the fun, exciting part of commercial property management done well at that strategic level. And that client, he's like, we're a client for life. I won't send anyone to anyone other than Dugan Co. And I mean, there's different industries. If you're in the health industry, which is booming and growing, you get reward in different ways. But when someone says something like that, you're like, this is what it's all about.
Yeah. So on that basis then, we're talking about how do you know if your property manager is not performing for you?
Yes.
How do you and your team score yourselves whether or not you're doing a good job?
Yeah, and it's important to always score yourself because also like when we're going out, we want to make sure that we live and breathe what we say. We've got business units that work to make sure that there's systems and processes in places as well as a commitment to deliver. So you need to have that layer of like, I'm not as strong on the 101 commercial property management, but all my owners know they can give me a call if they want some strategic insight. And it's making sure that there's things in place there to deliver. So where you see it not go wrong too, flags, if you've already owned an asset, arrears. As soon as you get arrears, then it's like, have a bit of a look. They should be contacting you and talking to you about it. But if that's not happening, then give them a call. I can run through some numbers again if you like on that. But we had a client who moved across to us. They had a 17 tenancy retail site and had $186,000 in arrears, which had been through previous owners and multiple tenants. Within 5 months, we got that down to $3,000. That's $185,000 cash in their bank, higher than before, based on a strategic approach and following through with commitment and delivering. How we have conversations with tenants as well. And when the team needs that help from the management or other areas, that it actually gets done.
Does go wrong sometimes.
It does go wrong. Which is why you get to 100.
Yeah. You must have seen some horror stories. Tell us like where you've seen it all go wrong and you've had to try and fix it.
Where do we start with commercial property management? There's never a dull moment. But we've had a few examples in terms of where there was I'm just trying to think of a good one that's appropriate as well.
Don't want to beat anyone up or send your legal letters to rethink it.
So say if we do need to enforce the lease and we've had to do lockouts, which can happen in cases, we've had bikie gangs rock up the next day. So we've got team and we've had to call the police and say, can you be there? And they say, no, we don't normally do that for lockout. And then next morning they see the bikies and the police all there and you're like, that's something interesting to report back to the commercial property owner. And then I guess some of the horror stories, which a lot of people I'm sure were probably affected by, was some of the floods in 2022. So for us, it was like literally it was on the weekend and it was on the Sunday it was coming through. And we actually went to one of the properties that we managed just behind the Bunnings in Newstead with sandbags. And we're trying to help because they were like at the border of where their property could have been.
Did you save it?
we helped, but it all got through in the end. But the intention was there. And at the same time, carrying sandbags, trying to get them there and calling our trades and saying, do you know what? I was like, can we block out your workflow for the next month? Because I was like, we're going to need all the staff or team who are affected, because at the same time, there's floods going of people's homes as well as businesses. So it's like, how do we need to support the team and people personally, as well as the businesses, and then go through the getting out mold, the insurance claims, and everything like that.
And that's another whole dimension to commercial property management. And this is where a really good manager can just be, that icing on top of helping you sort of create the best assets and maintain the best assets and accelerate returns. So what you're talking about there is your ecosystem of connected capabilities going, tradesperson X, Y, Z. You know them all, and you can say, I'm going to need you for a month. I don't know what it's going to be yet, but lock your calendar away. And they'll go, no worries, sure, because you probably give them a lot of work and they know you pay well and on time and all that sort of stuff, right? These things matter.
They do. And I think that's why a lot of people speak to Scott and different experts, is that relationship and connectivity, that ecosystem gives you leverage. So it's like, as a commercial property owner, if you've got strong relationships not only with tenants, contractors, key stakeholders, you're not just one owner, you also get the benefit of then looking at that higher level.
Yeah. And, these little 1%, which really matter, right? Whether it's, better negotiation, I'll say it's probably more than 1%, but better negotiations at least time getting up to market. Like, this is bread and butter stuff. But I know for you, Scott, where you can actually further maximise your investment, you touched on it beforehand, trying to put like solar onto roofs and stuff. Like, I know you've got a thing at the moment about solar, but it matters, right? Like, you can actually really amplify your investment by looking at these things.
Yes, that's right. And probably the biggest, like Sophie will explain it better than I, the biggest barrier to that strategy is getting the tenants on board. So, a lot of the owners want it. It's a no-brainer. It's like it's an extra lease on your roof, so why not? But then you've got to get the tenant to sign an agreement, and you've had a few troubles, haven't you, Sophie?
Yeah, and that's why it is very important also, before we go back, to make sure you've got a good relationship there, because that tenant agreement does need to happen for it to work. So it's important to have a look at what we found was solar is a great initiative, and something that we're very passionate about as well as at a corporate level, and working closely with Rethink, because we talk about building intergenerational wealth with commercial property investing, and solar is a way to help build that, add value, and also look at those future generations and the environment. So there's great reasons to do it. So people are on board, but it is still, if you're looking at different structures where the tenant has to agree to a PPA power agreement, they have to have buy-in as well. So you need to make sure the tenant's on board, and you can get that buy-in from a relationship ideally, or certain strategic discussions, as well as the site's feasible, how big the roof is, the integrity of the roof. So it's a great initiative, and there's huge opportunity in that space, but it's just making sure that those boxes are ticked along the way and it all stacks up on your investment too.
Do you find largely that most tenants are pretty good? Does the relationship get fractured between the commercial property manager and a tenant very often? Or what would be a catalyst for that, other than putting solar on the roof?
Catalyst for that is, say, if the property manager, if we said, having someone specialised or who is proactive, when that doesn't happen, that can be where you get upstream, like that's the upstream event that leads to a breakdown in that relationship. So like, I've called you how many times, the roof's leaking, the owner's not putting any funds into the property, I can't run my business. That's not very good for you to say, hey, let's go put solar on the roof. But then if you've got an owner who's really engaged, has got a good relationship, and you say, look, we've got this, and this is a win-win solution for tenant, for owner, and the environment. Here's how it's structured and here's how it looks, and make sure that they feel, because it is, if you're doing the leasing fee, you can do it by capital investment as well. But if you're doing a roof licensing agreement, it is still an agreement that the tenant needs to sign up to.
So let's talk the market for a moment while I've got you here, and also you, Scott. Southeast Queensland, I know Dugan and Co Property is looking to expand outside of your sort of immediate geographic footprint. It sounds as though you've got a good business model and the right sort of mindset and capabilities to do that. But what's going on up there is everyone's obsessed about the Olympics and infrastructure growth, and everyone's still moving to Queensland, intrastate migration. Are you going to tell me it's a good time to invest in Queensland, no doubt, Scott?
Yeah, look, every asset class is different. Like, you wouldn't probably go into the office market. So, look, it's the third largest city. It's got a really good long-term story. So, like to sort of quantify it, if I sent a property to, let's say I sent 10 properties to 10 buyers in Perth, I'd say 4 would be interested. So 40% of the market. I reckon it'd be 8, like everyone would want the best deal in Sydney, of course. So, but the yields and that will never stack up. But Brisbane's kind of that easiest route to a sale because no one can really talk down that market. A lot of people don't like the distance of Perth. I think that's a great market to invest in due to those kind of perceptions. But Brisbane is just mainstream. Everyone's into it. So it's a strong market. There's population growth. The industrial market's probably the hottest in the country right now. It's massively undersupplied. Build costs have gone through the roof. Rents are still growing at about 20% per annum. So that's a good story.
What sort of industrial? Like big industrial or small industrial?
All sizes. I'm finding the biggest stuff's harder to buy right now. So like I've got a few client briefs, 15 to 30 mil. And I'm searching like every day and I can't get anything good. And you think they've got $30 million.
What would that be? Like a Bunnings or something or other? Or depends where it's at, I guess.
Well, Bunnings, like say Ipswich, that's about a 50, 60 mil type asset. So it's half Bunnings. Like they're just kind of 10,000 square metre sheds, that type of stuff. 2,500 a square metre.
A square metre shed.
Yeah. Exactly.
Yeah.
So, but they're very hard to come by because fund managers, although they are hurting, know that the rent growth is coming. So a good fund manager is still holding onto a good asset, but they're flogging off the some of the other types of assets, which there's plenty of it on the market right now, but not the stuff we want.
And that's on the buy side. On the actual Queensland leasing market, business, despite some of the headwinds facing the economy and interest rates and uncertainty around what the future looks like, business sentiment's still reasonably strong up in Queensland. How's the leasing market?
Yeah, and business sentiment is interesting because what Scott said that recently it's asset class by asset class and obviously location and state driven. So the NAB recent commercial property survey showed that all other states were having some softening in sentiment, business sentiment and confidence. Queensland was up. And I think that is the big thing that can drive the market is business spending, infrastructure and population growth. And at the moment, we've got a decade pipeline leading up to the Olympics of 2032, which there's $180 billion of Queensland procurement projects up on the grabs for Queensland.
Sorry, how much?
$180 billion.
Okay. That's a fair few bucks flying around.
Yeah.
Yeah.
Population growth, we're getting strong overseas as well as interstate migration. The Brisbane Olympics is forecasted to do 91,600 jobs over the next 20 years. So it's not just leading up to it, but it's then afterwards. So the landscape in Queensland property market and demand has shifted. And I think before, historically, a lot of larger, national or other companies looked more so headquarters around Sydney, Melbourne, the bigger capitals, but more and more people are shifting up to Queensland.
Well, there's a talent pool there now.
There is.
Which is no longer connected with just the mining sector, right?
Yeah.
Resources sector. So, so it's a good place to be then.
Good place to be. And the leasing market has continuing to go strong. We're expecting further rental uplift still to continue in the Queensland leasing market.
So this year or into the future?
I'd say this year and 2024 is looking particularly in asset class though. So again, this is looking at all your industrial. Yeah. But also in retail, there's great opportunities, but you really need to understand your catchment and population growth infrastructure directly to where your asset is, what the mix of tenancy is now and what it could be, and starting to look at those future outlook opportunities too. But the retail's got a good space, but you definitely want to do very thorough due diligence where industrial logistics in Brisbane.
You can't go too wrong. And so on the retail side, are you talking like high street retail or more sort of shopping centre retail or
neighbourhood shopping centres, retail in the right location and with the right strategy as well. So, but there is say for supermarket centres, they're still all rolling out. E-commerce for supermarkets is about 8 to 10%. So everyone still wants a Woolies, an IGA, an Aldi, a service centre, and then looking at the tenancy mix that services that around that. So that combines some of your retail, but also looking at then medical or childcare and different things that you can do where you can actually look at repositioning the asset to get extra value if there isn't already that value there.
And people base up in Queensland at the moment, Brizzy, for example, but elsewhere, are they happy with the state of play politically? And have people got to spring to their step thinking that it's worth investing in Queensland? Therefore, commercial property is a reflection of the state of business.
I think there is in every market like different perspectives, and I think some people might not be as optimistic in other states, but Queensland, I think across the board, people are seeing the activity is there, the investment and infrastructure and that long-term plan is there to support it, despite changes in interest rate and how that can affect consumer spending in different areas. Industrial and logistics, very strong. And there's huge opportunity. I mean, there's a 300-hectare site just at North Shore, Hamilton, next to the Port of Brisbane. There's industrial property. It's just all adjacent to there, which is set to be some of the biggest like capital growth areas outside of the hotspots in Australia.
Yeah, and we sort of speaking quite flippantly about Queensland. It's a big place, right? I'll probably get this right, but I think I'll probably get it wrong, but I think I've got it right. Melbourne's closer to Brisbane than what Brisbane is to Cairns.
Yeah.
So it's a big joint, right? So we're talking about Queensland real estate. It's a pretty huge joint. That said, though, there is it's a surge in activity. I think you've outlined all the reasons why Queensland in many ways will continue to maybe outperform some of the other state capitals. What percentage of stuff would you be securing in Queensland, Scott?
Say around probably 40.
40% of your buyers will be in Queensland.
Yeah, so quite high.
And it's not abating. You've got your pedal down.
No, it's really just due to there's a good combination of yields and growth. And we're very aware of the pipeline as well. Like, to bring balance to the industrial, pump up we're giving, there is supply in certain markets that you need to be aware of. So, you just got to be aware of where they're building a lot, and then you make a commercial decision. If it's 1% vacancy rates and the economy is not shrinking, it can cope with these 30 new builds they're doing, So that's the type of due diligence you need to do. And different size industrial units will have different demand levels and different types of tenants that might suffer more in weaker economies. And the bigger stuff might be international, somewhat recession-proof type stuff. So there's so many little microeconomic factors that come into every decision. But overall, very strong market. There's depth to the demand, and the guys owning the properties seem to be quite comfortable and well off, because you don't get distressed sales, like almost never. It's almost a stubborn guy that goes, I'm not going to get my price. I don't care that interest rates have gone up. You're not going to get this yield that you think you're going to get just because you think you deserve it. So they just don't sell. It's
a challenge for the buyer, but it gives them a sense of the stability of the market. And the point I was making before, Queensland's big joint, right? How do you and your team keep dialed in with it from an acquisition point of view, but importantly, that your acquisition is going to be driven by the leasing markets? How do you keep informed?
Well, look, we've got 6 guys on the ground there. So, Sunshine Coast, Gold Coast. You met one of them, Mike. He's in a regional market.
No, it's
Goondiwindi.
Goondiwindi. Yeah. There you go.
So
he's right on the border of. Did I see him? I saw him on. It must have been one of the social media platforms flying his plane around somewhere recently.
Yeah.
Were you on that plane? No.
It's he literally
going out to see customers. Yeah.
No, he took a client. I don't know where they met, but he flies into all the regional airports. Like, there's one in where's the second one in Brisbane? The
Wellcamp. No.
Wellcamp. It's somewhere down near Acacia Ridge. There's Archerfield Airport.
Archerfield, yeah.
But he flew into Rockhampton the other day, or flies to Townsville, or down into regional New South Wales. And I spoke to him. How much does that cost you? He said, it's about $2,000. By the time you fill it and pay all the levies, and so it's not that much more, or than flying 2 or 3 people on an airline these days. So
you can cover ground because you got your own. You got your own Rethink Airlines or something like that. Service in Queensland.
Cessna plane. Yeah,
I can see it.
I think we need to get you a chopper.
Yeah. So that means it gives you exposure to all markets up there.
Yeah. So when I was in Brisbane, I was in the Sunshine Coast last week and just caught up with one of our guys, and he's literally just going to the sites, and he goes to auctions for fun. And even though we don't buy at auctions, I'm like, why are you going there? And he's like, I just want to see what the market's doing, and you can see the other buyers and which ones pass in, and On the ground is always important. So, we buy a lot in Tasmania. We've got a guy down there, and that really opens you up to so many more opportunities, because especially a local Tassie agent, they'd much rather deal with a local guy because it's rare. They're normally dealing with some head office in Sydney or some faceless investor from who knows where. And then when you are in the market, what's getting developed. Those smaller towns, everything that the council's doing as well. So yeah, it's key to invest better.
Yeah, you need the ground truth, right? And unless you've got boots on the ground, it's often hard to get the real colour. You can only get so much and extract so much out of data and reports. So you need to sort of be ducking and diving and seeing what's happening, getting a feel for what's happening on the street. I know we sort of spoke about it really briefly, Scott, and we did a podcast on this probably a year ago, maybe not that long, around rethink commercial education, of which, from what I understand, Sophie's one of the mentors of. How's all that going?
Yeah, really good. The feedback, it's actually frightening, to be honest, how much value is in that, because we're literally giving our job away. And
do you sell it, or how does it work?
It's an online platform. So we do cohorts, like it's small groups, about 100 people at a time. And the idea is, because it's all live masterclasses, it's quite face-to-face via the internet, of course. But Sophie gives, high level detail on everything about what they're doing. And then we've got the finance expert, we've got the lawyers, best case type lease, and all these kind of value adds. But it literally is, it's like doing 50 hours of this in a go, of our podcast. So you cram a lot.
Will you give me recognised prior learning?
Yeah. It's funny. A couple of clients are like, "Oh, can this be registered?" So our long-term goal is to, I don't know how to take courses, do it, but because there's nothing like it in the market. And this is like, we've got some agents who are just becoming sales agents, so they want to do it. So we're going to try to roll it out through commercial sales offices, because you're trained. Once you do that, like in 3 months, you're ready to go. So feedback's good. It's more detailed than I thought when I first started, because Adam Stewart, who was on this podcast, he's very, very detailed orientated. Like he's got that kind of analysis type mind.
Yeah, and I remember
he goes granular on everything, which is really good. So he just kind of pulls it all together, and then he's got all the IT side down pat, and then it's basically get the students in and out. So we've got another course starting. We don't know exactly when, but probably late this year, early next year, and we'll just do maybe a couple of them a year type of thing. So
some industry, but mainly investors. But I imagine what you find is that investors, they get informed and educated, and the key thing will be use the right professionals to do the jobs that they're doing, including commercial property management, which is pretty important.
Exactly. And a lot of them are already buying by themselves as well. I think 2 have already bought in that course without a buyer's agent. So it can be done.
Did they make good purchases though? Did you have a look at it?
Look,
didn't get involved.
I'll tell them if it's not, but honestly, they found the couple that did it, they found a good investment. So, I'm not going to poo-poo it.
Are you creating tomorrow's next commercial buyer's agents? Is probably what you're doing here, I reckon.
Yeah. Well, look, there's already there might be, but there's already a lot in the industry. Like every residential buyer's agency, every big one has a commercial arm now. So we're already up against like dozens in the space. But
they should focus though.
Yeah, and they don't do regular transactions, so they drop off. I've got agents who send me screenshots of every, I shouldn't say this, but like I know who's going for each property as well, because we've got that really close relationship, and they won't sell to them. I shouldn't say that, but if they offer a lot more on an on-market deal, of course they'll get it. But relationships, and we'll lose many. I'm not saying we've got every relationship down pat. There's probably many, many agents who don't like us for whatever reason, but we really kind of want to work with the good ones, and that's
Well, it doesn't sound like Dugan Co Property not like working with you, so I think you're safe there. But look, I really enjoyed the chat. How's the book gone? We sort of officially launched it really on last month's podcast. Have you sold any copies yet, or are people going up, seen it, read it, don't need it?
Yeah, no, look, it's gone really well. Like I think they did a couple of thousand in 2 or 3 weeks. So
God.
And it's like, because when I flew up to Brisbane, like I don't know how we got it, but it's the best position in all the bookstores.
Did you go in there and like move? I remember when we used to do print magazine, I would go and always move our magazines to the front of the airport.
No, we scored like the right hand corner on the kind of must read. So I don't know how long it'll be there. So hopefully for a while. But it's been really good. And we had that kind of database of buyers already readers. So a lot of them just wanted to update. And the book, this is something that's come up a few times. Everyone's like, "What's different in the book?" It's probably only about 20 or 30% of it is existing. So we kind of rewrote the whole thing to make it up, current and a little bit more detailed. So it's quite different.
Good. Oh, go and check it out. Available in all good bookshops, no doubt. Can you get it on your website as well?
Yeah, there's a page there.
There's a page there. Look at it, he's just a bit nonchalant. Just a book. Yeah, just another book. Doesn't matter. But thanks for coming in.
Okay.
It's great to meet.
Pleasure.
Yeah. How do people find more about you guys? Just Google you, they can track you down.
Dugan Co Property.
Yeah.
Look us up on Google and send an inquiry, and we'd be happy to help and chat to you more. Even if I think if you're feeling that lost or you need that advice, then we can start from there and go.
Yeah, and it sounds like because you're a mentor on the Rethink Commercial Education, that you're happy to give away all the trade secrets, knowing that people will probably come back to you anyway. Right?
We can dangle the carrot.
It's a good way to go about it. But that's Sophie Dugan from Dugan Co Property. We'll probably hear from you again in the future. Scott, thanks for coming in, mate. It's good to see you. It's always a pleasure. Getting close to Chrissy.
I know. And it's a busy finish to the year for all of us. Silly season starting, but as you know, property kind of fires up, then completely dies for a little while.
We've been saying it for a long time now about getting together, so maybe we should do that before Chrissy.
Yep.
Maybe we can bring some commercial investors along for a long lunch, proudly sponsored by
media. Sponsored.
It's good. People can track you down. Website.
Yeah, Scott. Rethink Investing. Just Google Rethink Investing is the quickest. Yeah. And have a chat. There's a lot of different avenues, whether you want to learn about commercial property or if you are ready to purchase. This is a plug for the market in general. I think it's a pretty decent time to invest because of the interest rate scenario. There is, as we were talking, we're either peak or very close to peak. And the minute the talk of rate cuts starts happening, which might be a long time away, we don't know, but then it's too late. So we're buying at about 15% better value than 12 months ago, to quantify it. So the deals are better.
And that will change in time.
Yeah, it's going to change through this rent growth we've been talking about. That is inflating asset values, even if the yields are the same. But yields are better. So there's kind of there's an opportunity to get a slightly better yield. And it's going to cost you in cash flow because your interest rates are so much higher. But that turns off, maybe half the market. So that's a good thing if you are a little bit cashed up, and you just got to use that opportunity to buy when the other half aren't. Because if you then wait for the perfect time when, let's say, rates drop to 4%, there's no guarantee that'll happen. But if it did, the market's going to go off its head. Values might be 20, 30% higher by then. So
good if you have commercial real estate at that point in time.
Yeah, you're going to already have it.
It's all about timing. I hope you enjoyed that. Run a little bit longer than usual, but a really good discussion. Intersected with a little bit of buying, but around mainly the core capabilities of having a really good property manager as part of your team as a commercial investor, absolutely critical. And I think we sort of uncovered how it actually makes a big difference. You want, rather than just the property manager does the compliance and the administration part of it, actually one of the asset managers who's going to help you maximise your investment. And I'll take it from Scott's words, increasing rent equals increasing equity. And I know that's an uplift on both sides. Good cash flow is great for managing your property and maintaining it moving forward, but everyone's looking for an equity increase. And that's what it's all about. Thanks for tuning in, everyone. We'll see you next time. Until then, bye-bye.